Good afternoon and welcome to NYFP. U.S. stocks are rallying with the Dow Jones Industrial Average posting a triple-digit gain and the Nasdaq and S&P 500 higher by at least 1%. Joining me this afternoon is Otto of Knight Capital Americas. Good afternoon. Thanks for joining me today.
Thanks for having me back, Remy.
Well, we've been seeing a reversal from yesterday's trading action. We've only just kicked off the month of May, but we have so much to digest in terms of economic data, earnings, and central bank rate decisions. But what about that saying?
Well, it's pretty appropriate with the Kentucky Derby coming up this weekend. I think it really matters, is the horse running with blinders on or off? So it seems as though with the stimulus policies that central banks around the world have put in play, the rally's on for today. Macroeconomic data has been soft recently, but it's sort of shrugging that off again. So I think that the stimulus is outweighing the macro data at this point.
And I meant to say sell it may go away.
Yeah.
But indeed, we got that central bank rate decision from the ECB, and they cut rates as had been expected earlier this week. But I do want to take a step back and look at the FOMC statement. They did make a tiny adjustment. They said they're willing to increase or reduce their stimulus depending on economic conditions. But do you think that's a big deal?
I think it is a big deal, and it's a wise decision, I think. It really opens the door for them to remain accommodative and adjust to macroeconomic data coming out, particularly in the labor market.
And speaking of the labor market, tomorrow we get that U.S. jobs report, and we'll be watching the non-farm payrolls as well as the unemployment rate. Today we saw a move lower for the U.S. Jobless weekly claims. It fell to a 5-year low, but what about the people who are not necessarily counted in the headline numbers? Does that concern you?
I definitely think it is a concern. However, it is sort of being shrugged off as well. There's a lot of traders that are talking about, the universal jobless claims. A lot of people are working 2 jobs that are part-time, so it's really difficult to say. There's other people that have actually left the labor market and aren't actually in those numbers as well. So I think tomorrow's numbers, as far as the non-farm payrolls numbers and the jobless rate, they'll probably be a stronger indicator, and the market will probably react off them. So, the unemployment rate is supposed to come in at 7.6, and non-farm payrolls, Bloomberg's looking for 140,000, Reuters looking for 145,000. The window is 88,000 to 215,000.
And I also want to take a look at the global PMI manufacturing figures that we've been getting. Now, there haven't been steep moves to either side, but were you surprised by any of the figures?
Not really. I mean, I think the PMI data recently, last night we had the HSBC manufacturing PMI out of China, was a slight miss. I think out of all the economies of the world, as far as the industrialized countries, China is more of a growing concern than the others at this point, particularly with the central bank data that came out from the U.S. and in Europe. However, I think people that trade China realize the fact that they are on track to meet their goal for the end of the year. It is a conservative goal, and China can actually react aggressively, so there's not too much concern there right now.
And last but not least, in terms of technical levels, we are back higher today, and the S&P 500 is at the 1597 level today. So we could get another closing high, depending on what we see in the next few hours, a record closing high, that is. But what are you watching?
Well, I think that if you watch market analysts, their picture is much different than what we're all trading off of right now and the levels that we're at. 1597 is a resistance level that we seem to be gravitating back towards as we dip. Going higher, the next resistance level is at 1604. 1570 on the downside is support, and then obviously the 50-day moving average down the 1530-35 level would be a very bearish indicator if we were to break that. However, analysts have come out and they've said, the market is, there's waning momentum. The fact of the matter is there's fewer stocks creating new highs. Another concern is the fact that the defensive sectors have really been leading the rallies going forward. So it'll be interesting to watch the sectors going forward to see who is leading the rally.
That's a very important point there. So thank you so much for your insight today, and thanks for all your commentary.
Thank you.